Inflation this week is a highlight. Jerome Powell was today, but don't expect much new from him tomorrow. I think markets already got its eyes set on the path for the Fed. The one thing this week that hasn't really been talked about, but I think could actually be a thing again, are the bond auctions. Now, not necessarily from like a volatility-inducing standpoint, but they are going to give us information no matter what happens. Nothing's changing on my risk radar. It seems like it's in pretty good shape right now. I'm watching bonds carefully. The green light there might be a little bit aggressive on the bullishness in the bond market, particularly, obviously, if the numbers come in problematic to the narrative of disinflation. But for now, I want to highlight the yield curve, and that's where we start. The 10s to the 2s over the past year, okay? For about 10 months, they've been in this range. I've talked about it a lot. If we just shorthand the yield curve as our tool for gauging economic health, the market's view of economic health, generally steepening is better than inversion and flattening. Okay, so those are our baseline for this analysis. Now, we are on a little bit of the high end of the range here, okay? We did have a couple big candles here, so that's where I want to zoom in over the last 10 days to get a closer look, because as you recall, I've talked about this on the show earlier this week and last week, because there was a narrative building that maybe the election odds were starting to work their way into the curve. So if you get closer into the last 2 weeks, okay, you get a better kind of example of how things have developed here. We got the steepening basically around the inflation print. We didn't get it on the debate. But of course, markets don't always work perfectly time-wise. Here's where the yield curve really started to steepen. Okay, that was inflation on Friday. Now, the debate was back here. Actually, the day after, we had a little bit of flattening. So we had the yield curve widening out. That was basically through to last week. Then it's cooled off a little bit here. Now, generally, when you have the steepening, it means one of two things. It either means that the market's pricing in more growth on the long end's going up, or you've got the market pricing in lower rates and cutting from the Fed. That's more the recessionary style, right? Because there's two different ways yield curve can steepen out. Last year we had bear steepening, which was repricing the long end yields higher because growth was coming in better than expected. But if you then deconstruct this further, you look at the 10s to the 2s over the last 10 days, the blue line is the 2-year, starts up here, makes its way down to here, okay? Whereas the 10-year yield is basically like unchanged, marginally higher. So this is really coming from now the market pricing in the cuts, and it's interesting because that occurred on inflation, not so much the debate. Possible the two could be intertwined, as we've heard former President Trump basically always talk about lower rates. But then again, so is President Biden. He said multiple times over the last 4 months that he expects the Fed to cut this year. So I don't think it's that big of a factor. What could tell us, though, is how we respond to the bond auctions the next 2 days. If this really is about presidential predictions of fiscal spending and who's going to cut rates, then one, you would expect the auctions to go a little bit more awry, a little bit weaker. You would expect yields to move higher on auctions. But I don't really think that's going to be the case, because this is more coming from the pricing of a Fed cut rather than the long end moving up. If it were a bear steepening, that would be more about election odds, because it'd be like fiscal dump on the economy that'll get things revving up again. So I don't really think that's it. The auction should go fine, but no matter what happens, they'll give us some information. If they go fine, then it tells us it's more about a slowdown in the economy and the Feds need to cut. If the auctions get messy, then that could reintroduce the question of fiscal irresponsibility. So something to watch this week. We'll be right back. We're not done yet.